Hi, this is Andrew Faldy, and I want to give you an example of doing a back test on a filter to see if it has relevance and see if it can be an effective and useful addition to trading. And this comes by way of a response to a recent blog post and a question that came into Bella that he responded to. And this was based on an idea and experience using moving averages to filter and only take trades that had are trading and were trading above those moving averages as a way to filter out and find things in strong trends. And so the question came back and said, well, you know, I get a lot of benefit from this, but a lot of times a lot of these stocks will be below the averages, and that means I have fewer setups. And so he's wondering if this type of thing is valid and useful. So Bella's response is, why not backtest these results? So we did that a little bit. I had a quick phone call with him yesterday, went through some ideas, and I've taken this and kind of applied one of my strategies to it. And I want to show you the results of using a very basic filter for a strategy. And these strategies are based on a daily time frame, so really even the strategy itself could be seen as a filter and finding things that could be in trends that might last for a couple months, and where you can then find better setups and improve your discretionary trading by only taking trades and positions that are in these conditions. So we'll just go through a few examples here. So we have Apple here. On the left is the strategy with the filter, and on the right is the strategy applied without the filter. So we can see that it's a trend-oriented strategy. It's not always in. It's looking for trades in the direction of the trend, like this, where, you know, it's going up, so it's in the position. If it thinks it's going down, then it gets out. If it starts going back up, it gets in again. So these are the types of positions that this strategy is looking for. And what I've done is I've applied the filter, and the filter is simply an exponential average set to 50 days. So a 50-day moving average. And I'm not going to get into testing, is 20 better than 50, is 50 better than 200. Just used a very basic one that is reasonable and would have not high frequency and would give you a lot of trade setups. So we are going to take a look now at Apple, and we'll look at a few other stocks too, and we'll do a side-by-side comparison of the filter. So we have on the left, we have a daily trend that has a good equity curve to it, and our stats are, this is a volatility-based sizing, so I can't give you ROI numbers necessarily, but the total return of the strategy with its specific sizing criteria is 139 over an 80 drawdown, which is 2.74 profit factor, and accuracy of 46%. So then we're going to pop over to the same strategy with no filter. So here we see that we have an extended drawdown period, ultimately rising with the high performance, but poor risk-adjusted returns with the extended drawdown. And going back to the stats, we have 75 over drawdown of 138, so much higher drawdown, profit factor only 1.5, and accuracy drops to 38%. So you can see in this quick example, using the filter, two things: reduces number of trades. So we have only 93 trades with the filter turned on. Without the filter, we have over 130. So we have a lot of those conditions where it wasn't really worth being in positions because it was not trending. And you can see a lot of those trades were cut out back in the early years of the strategy because it was not in play and was not moving. So that's Apple. Let's go through a couple other ones. We have Google. So here's Google with the filter and Google without the filter. Very similar performance. Look at the stats. without the filter, we have a 1.93 profit factor. With the filter, just a slightly higher profit factor, even though the total returns do drop a little bit. And we have accuracy 55 versus 46 without the filter. Let's try Zillow. So with the filter, 15 over -4, 4.8, very high, and that's only primarily because of one big move. 54% accurate. Without the filter, we have basically no return with high drawdown, basically no advantage on the profit factor, and 35% accuracy. And a quick look at the P&L curve. So all the losers bringing down, not letting the one winner run and generate gains. And with the filter, we stay out of a lot of the positions that were not worth taking and enjoying only the one big. It looks like one spike, but really what it is a 5-month period of opportunity on the long side in Zillow. Some other ones, let's look at Tesla. So here's same story. This is with a filter, so we're just not in a very basic filter. This is not curve fit. I'm using the same exact parameters for every one of these stocks. Same strategy parameters, same filter parameters. With the filter, basically no losers. It takes advantage of the one long trend. It looked like a spike, but really that trend is November 2012 all the way to October 2030. Is a 1-year move. And what the filter does is it only lets you look at that when it's in that 1-year move. And there's obviously 7 positions, 7 trades that didn't have big losses because it had a trend in its favor and minimal losses. If we go to without the filter, you can see there's actually drawdown. The giant move still gave you those positive results, but because we didn't have a filter, we had more losing trades, we had more drawdown, and that is the idea of a filter, helping us improve risk-adjusted returns. So huge profit factor, and that's because of one giant move and even bigger, much bigger, kind of enormous profit factor here. But again, that's a special case. It's something that's in play, and this is just one way to filter out and try to find things that are not just in play, but also with a trend in their favor is showing that it's a good opportunity as a filter. Some other ones that just tend to move nicely. Walter Energy. So here is with the filter, nice long history going back to 1995, and without the filter. So we have 130 plus trades, 104 total, and here we have fewer trades in the 70s and closer to 120 total return. Looking at the stats, with the filter, 2.4 profit factor. Without the filter, 1.95 with 30% accuracy, 39, just slightly higher accuracy with the filter. And just for, those are all ones that move. Let's just use the broad-based index as an example. So here's the strategy, the momentum-based strategy on SPDR without a filter, 94 to today. And basically a big old mess. With a filter, it's still kind of choppy because generally speaking, SPDR does not move very big and not create a lot of opportunity for trend following and momentum-oriented strategies. But with this filter included, we see that the performance increases from abysmal to bad, which is an improvement. So this is just an example of a basic filter on a decent strategy. This would be a trend-oriented, intermediate to long-term momentum strategy. And using that filter, very basic filter of a 50-period exponential average, has shown and demonstrated itself to be a valid filter. And you can do further testing and see if you like longer time frames, shorter time frames, and based on your strategies, apply your setups with that filter. Go back and if you've traded for a while, you don't necessarily have to do back testing to find out if something works. You can take your actual trade history and call that your series of strategies and your setups, and go back and find. It takes a lot of research, but you can do this. Put them in Excel and go back and find and say the ones that you did well with, were they above or below a filter like that? Whether it be a 20-day, a 50-day, a 100-day, whatever one you want to use, just use a simple filter and decide that's something you'd be interested in looking at, and say, were your long trades that worked, where you had a series of winners, were they all above the moving averages? And when you were struggling with something, was it not above that filter? And you might see that there's a correlation between your ability and your win rate and your ability to generate gains by using, if you had used that filter in the past. So just a quick example, very basic example of a strategy that is really, the whole thing could be used as a filter by itself. And I hope that helps a little bit and gives you some ideas for trading more bionically and backtesting and coming up with filters and ways to improve your results. That's it, and I hope to do another video for you in the near future. If you have ideas or questions, please send me an email, afaldi@smbcap.com, and I look forward to answering your questions as I get them. Thanks a lot. Have a good day.